heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off this week. This is Bloomberg Technology. Coming up on the program, Apple's Vision Pro is officially for sale. We'll discuss early demand for the pricey product and why big names like Spotify, Netflix, and YouTube are snubbing the device. Plus, Ford announcing plans for production cuts for the F-150 Lightning electric truck. More on a weakening demand picture for EVs and the 1,400 employees impacted by that pullback. And Amazon's $1.4 billion deal for iRobot is expected to be blocked by the EU's antitrust watchdog, sending shares of the Roomba maker plunging. All that and so much more. Happy Friday. It is the end of a shortened week because of the US holiday. This is what financial markets look like in the technology context. NASDAQ 100 up a percentage point. Outperformance has been the story in semiconductor shares. The SOX or Philadelphia Semiconductor Index continues to push higher 2 percentage points. So much of that is the ripple effect from what we heard 24 hours ago from TSMC, the biggest contract manufacturer for chips. And we're thinking about 2024. Do we see improvement for end markets that all those chips go into? Remember, next week is a big earnings week as well. You have Texas Instruments, you have Intel reporting. Do we continue that story, or does the momentum get halted dead? Yields 4.16% on the US 10-year, creeping up a little, and Bitcoin now back even nearer to $40,000 per token. There has been some kind of pullback and volatility after the euphoria of the spot Bitcoin ETF approvals of last week. Let's be honest, the big story, the single name of the week, has been Apple. Catalyst to both the upside and the downside. On a 5-day basis, we are up 2.4%, and we're headed for our second consecutive weeks of gains. Remember, one big catalyst was Bank of America's upgrade to buy, with some enthusiasm about what Vision Pro does on the hardware and services side of the top line for Apple. You can now place a pre-order for a Vision Pro. But if you go on the website, you'll notice one thing. The date of delivery is getting pushed back further and further. We have the perfect voice, Bloomberg's chief correspondent, Mark Gurman, with us now. Let's start with the data we see in real time. If you try to order a Vision Pro right now, what do you see?
Yeah, Ed, thanks so much for having me as always. That's right. The Vision Pro went on sale for pre-order this morning, 5 a.m. Pacific time. And right now, if you're going to place a new order, it's likely, if you're doing it for an online delivery, not to come until mid-March. You're seeing between March 8th and March 15th for all 3 storage capacities, 256 gigs, half a terabyte, and a terabyte. Now, if you're trying to do in-store pickup, the first day of availability is also booked up. But depending on the sizing of the headset that you need, you do a face scan when you order it, and it gives you a custom size. There's about 25 different sizes. You may be able to get pickup in the first couple of days of availability, but for the most part, if you're doing a delivery to your home, you're not going to be able to get one deep into March.
I think that, we're using the delivery date as a kind of proxy for early demand. And the Vision Pro is going to be initially a Pro, like high price point, small volume niche product. But it does seem like there is demand there. You agree with that?
People are quite excited about this product. There is absolutely demand. Now, it's unclear exactly what the slips mean, right? It could be a combination of demand, a combination of supply, a combination of both. You could be seeing really low demand, but really, really low supply. So it's not entirely clear what it means. But based on what I'm seeing on X, what I'm seeing on other social media platforms, the usual suspects, so to speak, the early adopters in the Apple community are all over this thing. I ordered one personally. As you know, I have a deep interest in Apple products. So it's people sort of in my category, early adopters, big time Apple fans, people that really want to learn more about the company that are buying this thing for now. And I imagine once some tech enthusiasts start trying it in an Apple retail store starting on February 2nd, they'll get about a 20, 25-minute demo. You'll see sales go up as well on that opening weekend. They'll have some inventory for pre-orders. But the company itself, they're expecting a pretty strong opening couple weeks, but for sales to taper from there, which is what you would expect from a new major product category at this price. The people who want to buy this thing have been wanting to buy it for months now, since it was introduced in June. So they're going to get their orders in early. And then it's really going to take price cuts and new generations of this product to really expand market share for Apple in the VR space and make it a real revenue maker.
Right. It follows the format of the iPhone, right? You have Vision Pro, but I guess we're waiting on the Vision Sans Pro at a later date. The news flow this week has been astonishing when it comes to Apple. And in the context of Vision Pro, we did a lot of reporting about the developers or content creators that are choosing not to make a Vision Pro specific application. Tell us those names and what we've learned.
Yeah, as someone deeply involved in the development of the product told me, it's going to be the applications that make or break this product. And right now you're seeing some of the top tier platforms deciding to not participate. I'll give you three names: Netflix, YouTube, and Spotify. Spotify is interesting, but you can use that through the web, and it's a music streaming service. And who really knows or cares, to be honest, if this is going to be a great platform for music listening? But Apple's really positioning this as a video and a movie watching device. And if you're not going to have YouTube or Netflix applications on here, that's a real drawback. Now, so they certainly have Max, Disney Plus, Peacock, ESPN, NBA, you name it. But the two biggest streaming services in the world, right, YouTube and Netflix not being on there, is a real omission, and it's potentially a problem for Apple out of the gate. Now, I have some theories as to why they're not participating. I think both are taking a wait-and-see approach. In the case of Netflix, maybe they don't want to prop up a rival in streaming who has Apple TV Plus. But at some point, you may see enough people tell YouTube and Netflix they don't want to use their services anymore if you're not on the Apple Vision Pro, and they'll have to get on there. But I think that's going to take a while. They're okay to lose 1,000 users, but if you start seeing tens of thousands of people saying we're not going to subscribe anymore over this, they'll have to make a change. But of course, that's going to take many, many months, if not longer.
Mark, the final story I want to touch on is in the context of the European Union. But if you're an iPhone user and you go into a store or grab some food, you can pay by tapping your iPhone on the receiver. And what Apple seems to be doing now in the context of regulatory action is opening up that technology to some of its competitors. Explain that one.
Yeah, it's interesting. So this morning, the European Union said that Apple had agreed to open up the NFC chip to third-party payment services. So right now, that tap-to-pay feature you described, Ed, only could work with Apple Pay, Apple service. If you're a third party, if you're a Chase, if you're an Amex, you can't integrate your own tap-to-pay service using that hardware component through your application. Now, Apple said they're agreeing to open that up, to change that. It's funny because on March 7th, they're going to be doing that anyways, right? March 7th is when the Digital Markets Act of the EU kicks in. That is a requirement of the DMA to open up things like NFC, to open up the App Store to third-party billing services, right? So Apple basically said they're going to be doing something that they're already planning to do in 2 months anyway. So not necessarily a win here for Apple. There is a scenario where they may lose a little royalty on Apple Pay because of this. But if it continues to fend off regulators and avoid multi-billion-dollar fines, that certainly is a positive for the company.
Okay, Apple up 0.8% in the session, up 2% on the week. And I highly recommend that you subscribe to Mark's newsletter, Power On, because you summarize all of that on a weekly basis. Bloomberg's Mark Gurman, chief correspondent. Thank you. Now, coming up here on Bloomberg Technology, Ford is cutting its workforce that's responsible for making the F-150 Lightning electric truck. There's a lot to discuss when it comes to EV demand. I also want to go back to Apple for a second. We're watching shares because on the back of that BOA upgrade, Evercore ISI has also added the stock to its tactical outperform list, with the firm writing that various risks surrounding the iPhone maker could be overdone. And remember, this year, a lot of concern about growth and a lot of concern about China. But ISI, Evercore ISI, a little bit more bullish. This is Bloomberg Technology. Turning to some breaking news just out a few moments ago on the Bloomberg terminal, OpenAI CEO Sam Altman is seeking billions of dollars specifically in an effort to secure supply for AI chips. It is part of a broader initiative that we're reporting here at Bloomberg, myself and colleagues, including Dina Bass, that the aim is to set up a series of fabs globally, plants or factories with specific dedication to capacity for these AI chips. Let's get right to Bloomberg's Dina Bass, one of the co-bylines with me on this story. And Dina, we've done a lot of reporting on this kind of initiative. We know that Sam Altman was looking at chips, but actually what's new here is the focus on capacity, future capacity.
Yes, that's right. So in the kind of wake of the Sam Altman ouster, we, Ed, you and a couple of other reporters reported this chip initiative. But I think the belief or assumption was that what OpenAI would be doing here is similar to what Microsoft is doing, is similar to what Google does, is similar to what AWS and Annapurna does, which is design their own artificial intelligence chips. In reality, what we hear from our sources is that what Altman is trying to address is the chip shortage, that there's not enough fabrication capacity to make enough chips. Now, that's been going on for a while, but what OpenAI and Sam Altman want to address is actually not the current shortage. It's, what our sources tell us, Altman fears that there will be a significant shortage a couple of years out from now. So when we come to the end of the decade, if artificial intelligence is as pervasive as Sam Altman thinks it will be, if you remember, he's very focused on heading towards AGI, artificial general intelligence, then there will simply not be, in his view, enough processors for what he thinks is going to go on at that point.
There are still many questions about how mechanically this would work, right? What I'm hearing, you're hearing, is that there's all these talks with all kinds of investors to raise a huge sum of money, tens and tens of billions of dollars. But in reality, it's not just as simple as saying, OK, great, we've got the funds, let's build a load of chip factories wherever we want. The market is dominated by TSMC, Samsung, and a hopeful newcomer in Intel. What do we know about what's on the table here in terms of the proposed way this would work?
So what we're hearing is that Altman is now on a stage of, as you say, putting together sort of a group of partners. So some of that is the capital, the investors, who's going to fund all of this. And some of that is talking to the existing chip fab companies. We're not hearing that OpenAI wants to, start learning how to pour concrete or anything like that. This is a really complicated business with really just about 3 competitors in it. And, it takes a ton of expertise to do. So what we're hearing is that the idea would be to work with the people that know how to do this. But again, to figure out a way to dramatically expand the capacity so that 5 years from now, the industry doesn't find that it's not in a position to produce what's necessary, in Altman's view.
Dina, I just want to relay to our audience that OpenAI, Intel, SoftBank, TSMC, Microsoft, and G42, which is a firm that we had reported in the past, wanted to give Sam Altman money for this, did not respond to Bloomberg's request to comment or declined to comment. Samsung in particular, just a key name in the fab space, didn't respond to our request for comment. But the takeaway that I have is that forget what happened with Sam Altman's short departure from OpenAI and then return. He's able to go out there and talk to people, raise money, and come up with these big plans, which, let's be honest, this is a bold move in the context of how chip manufacturing actually works.
Right, absolutely. And he was obviously in Davos this week, so we will see if anything comes out of any meetings there as he tries to put together some sort of consortium behind this. You mentioned Microsoft. We have reported previously and have reported again today that Altman has held talks with Microsoft about this idea, and that the software giant remains interested, potentially in being a part of it. Again, they declined to comment as well. But, what we're reporting, you see Sam trying to put together the pieces of what he would need to do this, to put together financial backing. As we mentioned in the story, there have also been talks with SoftBank, and to put together the expertise around chip manufacturing. And as you said, this is a much more dramatic initiative, and there's various forecasts for the AI chip field. there are some people who feel that there will not be enough, and there are some people that feel that the industry is on a trajectory to increase the number of AI chips that are manufactured that will be just fine.
And the reality is that what we're right, and all I was saying is that what we're reporting, the reality of, is that it's the world's leading AI company trying to have a more direct control over its supply chain. For one of a better summary, Bloomberg's Dina Bass, great to work with you on this story. Thanks for joining the show. Now, another story that we're tracking is Ford. It says it's going to reduce the number of workers that are making its F-150 Lightning truck, and that is due to demand for electric vehicles weakening. About 1,400 employees will be impacted that work on the assembly lines for F-150 Lightning. I want to bring in my friend and colleague Keith Norton out of Detroit. And Keith, this is directly linked to what we already knew. The F-150 Lightning production this year will be half what Ford previously estimated. But just explain the mechanics of how they're carrying that out.
Yeah, so they are, as you said, eliminating 1,400 people at the F-150 Lightning plant. Interestingly, 700 of them will move over to an internal combustion engine plant here in Detroit that builds the Ford Bronco SUV and Ranger pickup truck, because those traditional gas-fueled vehicles are selling very well. So they're adding a third crew to that plant while going down to one shift at the Lightning plant. It really does reflect on this weakening demand that we're seeing for electric vehicles. Sales of electric vehicles are still up, but their growth has slowed dramatically. UBS sees their growth at about 11% in the U.S. this year. Last year, electric vehicle sales grew by 47%.
And therein is the story, right, Keith, that, they're saying there's still demand globally. It's just even less than our already lowered expectations. And at the same time, we've got to make sure we build enough of our popular combustion engine cars. Tell us the summary of the EV story with Ford. All I see is Lightning, and all I see is Mach-E and OK Transit. What are their bigger picture plans from this point? You and I did a lot of reporting on that historically, but things kind of seem a bit stale.
Yeah, so what they have is their first gen EV vehicles out there, which, arrived, as you recall, Ed, with a lot of fanfare, but they've really slowed. They've also cut production of the Mustang Mach-E. There's incentives on that now. They're really talking up their next gen EV vehicles, which will be ground up electric vehicles with all kinds of digital capabilities that are, to be discovered by consumers, but they promise they'll be very exciting, but those are still a ways away, 2025, 2026. And that's one of the reasons UBS actually cut Ford this week to hold from buy. They feel like the payoff on Ford's EV strategy is going to take longer than expected.
All right, Bloomberg's Keith Norton on the Auto Beat out in Detroit. It's great to catch up. Thanks for joining the program. Now, coming up here on Bloomberg Technology, an all-European commercial crew is on its way to the International Space Station, the first time that all the seats are occupied by Europeans. We're going to have those details coming up next. I'm also taking a look at shares of AMD. We're currently up 3.5% in the session. AMD pushing fresh record highs. And what's so interesting about it is its outperformance relative to NVIDIA. They closed at a record high Thursday. The momentum in that stock continues. It's a 12% gain on the week. And this is a name that in the next couple of weeks reports earnings. What are we looking for? MI300X, the AI accelerator. What do we want to know? How many of them are they really selling in the real world? But investors seem really bullish around this name as one of the picks and shovels, as Caro calls it, in the AI space. This is Bloomberg Technology.
Ignition, engine full power, and liftoff. Go acting cruise.
They're on the way. SpaceX rocket blasting off yesterday, carrying the first all-European commercial crew to the International Space Station. It's a landmark mission for Europe's space industry, which frankly has been struggling to get off the ground due to a number of delays on the launch system side. I want to bring in Bloomberg space correspondent Lauren Grush. This is kind of business as normal for SpaceX. For Axiom, it's an important moment with an all-European crew, and for commercial spaceflight, also important. Just give us the basics of this mission.
Sure. So this is actually the third mission for Axiom Space, which is a company based in Houston hoping to build their own private space stations in the future. And basically these missions that they've been doing with SpaceX, they held a contract to do a number of these missions to the International Space Station. They're a bit like practice missions, precursor missions to when Axiom has its own private space station in orbit, which it's hoping to launch this decade. So this is giving them kind of a dress rehearsal for when they send humans to their own station one day.
What you said is really interesting. I kind of see the mission as more evidence or momentum of the public sector or space agencies handing over to the private sector to get this done. And you know that I love the numbers, right? SpaceX charges like what, $55 million a seat to carry people up. And then the idea is that Axiom wants to be like the travel operator, you know, the broker, the middleman. Is that a good summary?
That's essentially what's happening with these Axiom missions. And then eventually, you know, they'll move to their own space station. But yes, the idea is to eventually transfer kind of or give the keys over to the commercial space industry. You know, right now, the main destination for astronauts in low Earth orbit is the International Space Station, which is overseen by NASA. But, you know, eventually the space station will have to come down. It's destined to stay up until the end of the decade. But the idea is eventually private space stations will take over what the International Space Station has provided for astronauts. And Axiom Space hopes to be one of those companies to take over the reins when the space station has to eventually come to its end.
Lauren, real quick, I know you cannot be in two places at once, but while we speak, there's a key lunar mission being carried out by Japan's space agency. Just give us a quick summary of what's happening above our heads.
Yes, so this morning, Japan attempted to land its first probe on the surface of the moon, and we were kind of left in a state of ambiguity when they said that it landed, but they could not confirm the status of the lander. I believe we just got confirmation that it did indeed land. They secured a signal, but we're not sure if it's generating power with its solar panels, which is not necessarily a good sign. I believe there is a press conference going on as we speak, so maybe we can get more details once I sign off here.
From planet Earth, but all views on space, Bloomberg's Lauren Grush. It's great to have you on the program. Happy Friday. Now, coming up on Bloomberg Technology, Amazon's $1.4 billion iRobot deal is due to be blocked by the European Union's antitrust regulator. We will go over to the continent to talk about that and go a little bit broader on what's happening in the antitrust context of big tech in Europe and in M&A. Bloomberg's Mark Bergen's going to be joining us. And remember, we're fresh off the back of a conversation with the EU's competition chief, Margrethe Vestager, who joined me on set just 10 days ago. From SF, this is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco. So as it stands in the markets, the NASDAQ 100 on track to close at a fresh record high on a 5-day basis. We're up 2 percentage points, second straight week of declines, although it's worth reminding ourselves, despite all the news flow, we're only, 2 full weeks into the year. So the story here has been about mutual funds, hedge funds being very long the technology sector, which they were not at the beginning of 2023. There's an element of FOMO, that you need exposure to tech, because if you weren't in 2023, you missed out on that rally driven by the Magnificent Seven. But remember, the Fed also factors into this. And all week, we've been kind of going back and forth on the depth and cadence of rate cuts that we will or won't get in 2024, driven by all the Fed speak that's happened this week. Next week, the story is all about earnings. And into that, valuations are high and expectations are high. How does AI, God, that's a lot, isn't it, factor in to that equation next week? In the news flow, two clear movers. iRobot down 27%. Amazon is higher by 0.5 percentage point. Bloomberg reporting that according to sources, the EU will move to block the $1.4 billion acquisition by Amazon of iRobot because they have not offered remedies and they've not addressed the EU's concerns with arguments. Now, what's interesting about this, 10 days ago, the EU competition chief, Margrethe Vestager, joined me here in this studio And at that time, we knew that Amazon had not offered remedies. And she said very simply, we need to understand then what their arguments are. Have a listen to this.
In any merger, it is so that if we have concerns, it is for the businesses either to address these concerns by debunking them or by addressing them by coming up with remedies that will solve the problem. And if a company say we will not come up with remedies, well, then, of course, we expect that they have good arguments that our concerns should not be sustained. And we are still in the process of assessing our concerns compared to a situation where we do not have a remedy to the concerns that we have drawn up.
So that was the EU Competition Commissioner 10 days ago talking to me about this Amazon iRobot deal, saying we don't have remedies, so we need good arguments on why this deal should proceed. I want to bring in Bloomberg's Mark Bergen out of London. And Mark, what do we know? Because it seems like Amazon did not have good arguments. And it also seems like the issue here is that some kind of meeting has taken place. You know, our understanding, according to sources, is that there was a meeting between EU officials and there was a meeting between Amazon representatives, and had been informed that the EU intends to block that deal. I think we're having some issues with our reporter. We'll go back to it later on. I want to stick with M&A and acquisitions. Valsoft, a Montreal-based company specializing in acquiring and growing vertical software businesses, announced the closing of a $170 million funding. Investors include Coatue and Viking, and I'm delighted to say Valsoft CEO Sam Youssef and my good friend Bloomberg Sonali Basak join us now. And Sonali, I'm going to let you take it away in a second, but Sam, this is an unusual financial transaction. So you're raising money, but the investors are basically handing it over to you so you can go shopping.
Yes, basically, thanks a lot for having me on first, Ed and Sonali. It's a pleasure to be here. Basically, we're at a point where 2022 and 2023 were very good years for M&A with interest rates going up, uncertainty around the economy. For a serial acquirer like us, it was a good environment. We deployed our capital, did really well. And we went out to the market to, get additional funding to execute on our pipeline. And we had the option to raise money through equity. But we had this offer from Coatue and Viking that involved, a hybrid type of arrangement where they give us money and there's a payment in kind rather than cash interest, allowing us to preserve maximum liquidity to execute our pipeline and diminish the dilution. Given that we had such a clear way to allocate the capital, we decided to go with something like that because we could increase the value of the company and create more shareholder value that way and delay a little bit the equity financing.
Sam, tell us about the process here, because there are a lot of questions about crossover investors, big hedge funds in the venture capital space. How hard was it to raise money at this point in time, and why did you go to Viking and Coatue?
Yeah, well, Viking was already an investor in the company. They bought 15% or so equity stake back in 2022 and 23, and then they chose to participate in this funding, backing us to do more of what we've been doing. And Coatue has this new crossover fund that suited our needs perfectly. For us, it wasn't hard to raise equity. I think there's a big divergence that's happening in the market between, speculative growth and sort of quality. Valsoft's business model is around mission-critical software and the serial acquisition of these small to mid-sized companies. The market is consolidating, and Valsoft has been able to build a global platform to be a significant player in that consolidation. The market participants appreciated that and wanted to be part of it.
Sam, what about the valuations you're seeing in the market? Presumably, they're still falling. So how are the pricing mechanisms behind which you're buying assets for?
So what we saw happen in the market is around 2022, mid-2022 and all of 2023, it was a good market for us. So we're like a value-based buyer. We're looking at, buying things that we feel could be accretive to our shareholders. So with interest rates going up, private equity being a little bit more cautious, the private equity portcos doing a little less deals, it was an exceptional environment for us because we are cash buyers. We do deals on unlevered basis, and we saw a record pipeline, and that continues for now. But you could see, like with the rally that's been happening in the markets, we're starting to see a little bit more competition than we saw over the course of 2023.
What about the potential to go public? If you think about your own path moving forward and the rivals around you, the potential things that you could buy, are the public markets attractive, or are people preferring private hands?
I think for a company like ours, the market would be reactive. Like the private market interest is an indication of that, and I think it would be our plans to execute on an IPO potentially in the next 24 months or so if the opportunity comes.
Sam, in the market, but also in your operations, I've got to ask, how's AI factored into all of this?
Yeah, of course, it's. The jury remains out. I mean, I was reading about this new startup by Shamat Palihapitiya, the 80-20, where they're promising to build 80% of the features at 90% less of the cost. Our feeling is we deal in vertical market software, so the integrations in a specific industry are very difficult to replicate and give us a barrier of entry. Like we haven't seen any meaningful impact. We haven't seen any impact at all, other than the fact that it's enabled us to offer more to our customers for a similar price. And so far, it's given us some efficiency in terms of we support our customers. There's efficiency around that. We've seen the productivity of our developers go up significantly, and that's accelerating. The jury remains out. I think it's still not clear, but you could see a world where software companies become more efficient, and you could also see a world where software companies could become a little bit more commoditized, especially more horizontal companies.
Valsoft CEO Sam Youssef and Bloomberg Sonali Basak, thanks to you both. Some breaking news crossing the Bloomberg terminal moments ago. Within Google DeepMind, some of its key scientists are in talks to leave and start a new AI startup. Bloomberg also reporting that those scientists are looking at fundraising and some big numbers are involved. Let's bring in Bloomberg's Mark Bergen, who is out in London. Mark, you led some of the reporting on this. What do we know?
We don't know a great deal, but we do know that the names are involved are two key long-term scientists at DeepMind, which has been long considered probably the most leading AI research lab in the world. They're based in Paris, where there's a lot of activity around French AI. We saw the Mistral AI, the OpenAI competitor that came up last year and is now worth $2 billion. This is a round we've heard, an initial funding round, potentially they're in talks with investors at 200 million euros, which is a huge amount even for generative AI. But these are researchers, two of them at least, that have had multiple experience. One of them was involved with the AlphaGo paper, if everyone remembers that from 2016, where DeepMind built that algorithm that was the first to ever master the game of Go, and it was just a seminal work in the field.
All right, Bloomberg's Mark Bergen, who is one of the team out in Europe and here in San Francisco reporting out that story. And to your point, 200 million euros. I mean, Mistral's debut fundraising round was just north of 100 million US dollars. These are big sums for a two-person act that we've seen a lot of activity around in recent months. Thank you very much. Now, coming up here on Bloomberg Technology, we continue talking about all things tech M&A in 2024 with Masha Butcher from Day One Ventures. My goodness, as Fridays go, there is a lot going on. That conversation is coming up next. This is Bloomberg Technology. After the Adobe Figma deal was called off, Where do we stand in tech M&A, and particularly in looking ahead to 2024? Delighted to say we're going to talk about that with Masha Butcher in today's VC Spotlight. She is the general partner and founder of Day One Ventures, an early-stage VC firm, but with lots of asset under management. Masha, we got obsessed in September about a very short-lived IPO window, and then we kind of lamented that a lot of deals got shut down. If you're a venture capitalist with a portfolio of maturing companies, what are your options in 2024? What do you advise them to pursue?
I think, first of all, Figma is one of the most interesting and most important companies of our time that's creating a ton of value for freelancers and for early stage entrepreneurs and for people. And this deal being call-off meant a lot. I think, first of all, it meant for later stage investments that looking to invest in later stage. And right now that investors realize, as you had a deal and there is someone who wanted to acquire your portfolio companies and ready to pay sizable amount for this opportunity, it might not go through because some of the regulator might not let this deal to go through. This is first, and I do think it will lead to decreased amount of investments in later stage. I think for early stage, it would also mean a lot. If this deal went through, it would have been $7 billion of fresh capital that would go back to VCs, to some of the early investors in Figma. So it's $7 billion that would have gone to top tier funds and some other funds that have invested in Figma early that they could reinvest in other opportunities. And right now they wouldn't be able to do so. And I think it's also influencing early stage in different direction. Right now, everyone understands if you invest in company in a very early stage at 5 to 10 million valuation, like our fund does, you do still can have very good and sizable returns because you have secondary opportunity. You could still make a lot of money if your company exits at 1 billion. It doesn't have to grow as far as 20 billion. So I do think midterm, it will increase competition on early stage, on the stage where we're operating.
The AI case study is very interesting because if you look at early private market investor enthusiasm and take some examples like healthcare or biotech, those types of companies do seem ripe for acquisition for mature or long-standing publicly traded healthcare companies, right? That they could be a destination for a smaller firm with a micro focus.
Well, I think AI is very exciting. I personally think that AI is the only way for us to solve some of the most pressing problems that's related to climate change, that related to some horrible disease like cancer. And it's really one of the very few ways in the world to increase equality and to give economic opportunities to less developed places and less developed part of the population. But I do think at the same time, if you're an AI company, culturally, you're so different and you operate so differently compared to the rest of the economy that I don't think it's a good pathway for any progressive AI company to be acquired by old school big public companies in biotech or in any other field. So I actually do think we will be in the world when AI companies will be bigger than their old school companies that's not AI companies. And I do think that in a few years from now, I wouldn't honestly tell you which company would be bigger, OpenAI or Microsoft. I actually lean towards thinking that it would be OpenAI. And we can use this analogy when we think about any other AI companies.
Masha, what does 2024 look like for you? You know, where are you going to be focused and writing checks thematically or geographically?
I'm really focused on humans my entire career from two perspectives. On the one hand, I think there's like only one topic right now that's as exciting for me as AI, and this is future of human. And I think there are different things that falls into this bucket that can have to do with longevity and health. It has to do with future of reproduction. It has to do with mental health. I do want to explore what it is, future of human. And I do think there are different new leaders like Brian Johnson that pushing the boundaries of what's possible. And I do think Brian himself creating a burst for so-called blueprint economy when people will organize their entire lifestyle around that. I do like to say that future of consumer is longevity, because I think you can't get too healthy and you can't get too happy, and more people finding out about the opportunity to improve their health, to improve their mental health, to improve their relationships. So I think future of human is really interesting. And I'm kind of investor that invest very early, and I invest in founders. And I keep being excited about meeting new founders, which is different from anyone else and can change the world. I think tech founders and tech entrepreneurs are the ones that will drive the biggest change for humanity, and definitely change for the better. And I'm very hopeful to meet new companies and find out what are the other crazy things that I come up with that will change the world that we live in right now with such a big speed.
Day One Ventures general partner and founder Masha Butcher, great to have you on the program and good to catch up. Thank you. Now, we're also going to stick with AI for the rest of the program. Coming up, AI-powered wearables are going to take on the smartphone market. If you heard that one before, we'll bring you some details next. This is Bloomberg Technology. All right, here's some news in Talking Tech. And first up, TSMC's outlook for capital spending and revenue is lifting hopes of a bounce back in smartphone chips and computing demand for 2024. Other chip stocks like Nvidia or over in Tokyo, Tokyo Electron gained more than $160 billion of market value after TSMC gave its outlook. And also, fast fashion giant Shein firmed up plans for a US IPO late last year, but despite selling nothing in China, it's still going to be subject to review by Chinese regulators. The revelation cast a cloud over the debut of an estimated $90 billion company that could be the fifth largest consumer company IPO of all time. Plus, the judge presiding over Epic Games' challenge to Google's Play Store business model wants to hear from expert economists, saying he's not confident about setting a fee for mobile app developers without some expert input. Google Play currently charges commissions of as much as 30% to software developers who typically don't have any other options. Okay. AI-powered wearables are taking on smartphones. A new crop of pins, monocles, smart sunglasses, they're all coming to market and are trying to challenge the dominance posed by traditional smartphone. I want to bring in Bloomberg's Shireen Ghaffari, who's been writing about this in her newsletter. I must say, at CES, this was the thing. AI is real. It's in these devices. What have you been writing about?
That's right. I think we're seeing the most hype and excitement around AI wearables since perhaps 10 years ago when Google Glass first came out. People are really trying to capitalize on the rapid advancements that have been made on the software side with Gen AI and bring that into hardware.
A part of this story is a bet that human beings change how they interact in terms of communication. Right, Humane is what we're showing on the screen now. We've had the CEO on the show, but it's going to be different from having something physically in your hand, seems to be the main takeaway.
Correct. The idea is for a lot of these devices, they're not aiming to necessarily completely replace the smartphone right out, but try to be a supplement to it. Kind of like how we have an Apple Watch. So Humane is a pin that you can attach to your clothing. There are monocles that you can add to your glasses. Meta has its smart Ray-Bans. And then, of course, we're seeing Apple's Vision Pro, which is a lot more heavy duty and seems like it's being pitched very much in an enterprise fashion as well, coming out next week. Or in a few weeks.
The monocle, $300 from Brilliant Labs, AI powered. It makes me think about that emoji, which, I'll post it on X after this. But we have 15 seconds. Which of all those things are you most inclined to use?
For me, it's the classic sunglasses. Actually, on a recent trip to Hawaii, I crushed my normal analog glasses and I had to use Meta's Ray-Ban testers that I had for fun. And they kind of, were sort of seamless because they looked like, again, regular shades. I didn't look strange if I was walking around in public wearing them. So for me, something that's sleek and designed well and looks normal is what I value.
All right, Bloomberg's Shireen Ghaffari. Check out her newsletter. Thank you very much. That does it for this edition of Bloomberg Technology. Check out the pod. By the way, new time starts next week. This is Bloomberg Technology.